Hello and welcome to the Business Clinic, live from the Financial Times in London. I'm Claer Barrett, the FT's consumer editor, and today we'll be live for the next half an hour taking your questions and reaction to Rishi Sunak's budget yesterday. Now, some are describing it as a bounce-back budget because it's firmly designed to help businesses and the economy boom as we come out of lockdown. But of course, there's also going to be a rather large payback element to all of that government largesse, with alarming fears about the level of corporation tax increases that will be required to pay for all of these emergency pandemic measures, which in the short term, businesses will now be able to claim. So for the next half an hour, I will be joined by Andy Bounds, the FT's enterprise editor. We will be taking your questions live. If you're watching us in the ft.com story, hi there to you. You can comment at the bottom of the story. The questions that you put there will magically appear on my iPad. If you're watching us on YouTube, then you can use the YouTube chat function to talk to us. And if you're watching us in LinkedIn, similarly, use the chat function there if you want to put a comment and ask a question. And I would emphasize, we really appreciate hearing from you, people who are actually running businesses. It helps to inform our reporting of the budget story. So even if you don't think that what you have to say is of interest to others, believe me, it really is. It's of interest to us. Your views are what we're trying to capture in the next 30 minutes. So, Andy, let's go over to you. I mean, I'll start with the rise in corporation tax. I mean, just to put this in context, the last time a chancellor increased corporation tax at the budget was 1974, which I think was before either of us were born. I mean, this is a really, really big step change, especially for a Conservative chancellor.
Yeah, I was 3 years old, actually, I have to confess. And I will remember my dad lighting the candles when the lights kept going out, as would be familiar to some of our viewers in Britain in the 70s. Yeah, I mean, let's put it in context. It is a huge rise. It's a very historic rise. But on the other hand, corporate tax has been cut substantially. So this level it's going back up to was the level not that many years ago. And George Osborne, made it a big mantra to cut corporation tax down to 19%. He actually wanted to get it even further because he wanted to attract international investment into the UK. So the interesting thing which small businesses need to know is that this corporation tax is very much aimed at big businesses. So what was great, I think, is that he reintroduced a small business level, which again used to exist and had been scrapped. So small businesses will now still only pay 19% until you start making profits of £50,000 or above. And remember, this is profits, not turnover. This is, after paying yourself and all the rest of it. So that takes, I think he said, about 1 million small businesses out of tax completely. Corporation tax. You've then got a sliding scale as your profits go up, and so you need to be earning something like over £200,000, £250,000 profit per year to actually qualify for the 25% band. And the Chancellor said that 70% of businesses will only pay the 19%. So it's a sort of it's big numbers. It's aimed at an international audience. For small businesses in the UK, it's probably not going to affect them that much, at least in the short term.
Well, we would hope, and certainly we want to hear from you. So tell us what your views are on those corporation tax concessions and the tapering off. Now, I'm going to ask you, Andy, a bit more about super deductions, about grants and loans, and also about the self-employed before we go to questions, just to give people an idea of what to expect. So the kind of quid pro quo, if you like, for this huge hike in corporation tax is that the Chancellor is introducing what's being called super deductions. So that's ways of getting a tax break if you invest in your business in the next 2 years, which he hopes will create a virtuous circle where firms are buying more plant and machinery, in turn helping the other firms that are producing that and selling it to them. But how valuable is this going to be to businesses as a tax break?
Yeah, I mean, again, a big headline number, 130% of the value of what you buy will be eligible to be written off against tax. Again, the Treasury calculation says that's about 25p in the pound spent. because obviously tax isn't 100%. So anything you buy, you'll be getting a 25% discount effectively for the next couple of years. It's also important to note that this is very much aimed at the manufacturing industry. So it is plant and machinery. I did talk to businesses yesterday who were saying, "Oh, I want to open a new shop, or I want to refurbish." So sadly, that kind of spending won't be covered by this. But it's very much aimed at manufacturing, and it will be a very big boost, I would have thought, for the next couple of years, especially in those parts of the country where the chancellor, is very keen to level up, where manufacturing's still strong. And it should help those companies recover from the pandemic. I mean, it would also, of course, possibly lead to job losses in the short term, because generally, when people invest in machinery, it's to replace labour, so it makes you more productive. Doesn't necessarily increase your labour force, and that's been the story of manufacturing over the last sort of 20 or 30 years. Is that it's grown where those companies that have grown have tended to do it without massive job increases, because they do it through investment, which is a good thing because it keeps them competitive. But I don't think we're going to see a jobs bonanza, but we might well see an investment bonanza.
Well, that's knocked out the first question I had from FT Reader Casual Observer, who was asking what assets will qualify for these tax breaks. Will business premises qualify? So unfortunately, the answer to that one is no. But of course, having a business premises, especially if you are in the retail sector, hospitality, leisure, personal care, businesses like gyms. Now, these were all businesses named yesterday that will receive some extra help potentially in the form of a grant through the business rates system. If you are a retailer, I believe you can get up to £6,000 in the next grant, and the leisure and hospitality industries, again, depending on the rateable value of your business premises, up to 18,000. I mean, that was an unexpected and I'm sure welcome boost, Andy.
Yes, indeed. And of course, these are grants per outlet often. So for a retailer with 2 or 3 shops, you can get 2 or 3 grants. And the small business I spoke to ahead of the budget, I then called up on the day, and they were naturally very, very happy with those grants, because they're all fearing, this trench between now and full reopening, which could be as late as June for many of them, and a return to normal, which could be even longer. And how do you, get across that trench without this extra support from the chancellor, a bridge, if you like, and therefore that and the extension of furlough were the 2 huge things. And I guess we should also mention the VAT extension. So VAT will remain at 5% for hospitality businesses. There was some push to move. Lots of retailers wanted that extended to retail as well, which was denied. But I think it'd be 5% till September, and then 12.5% even as far as next April. So that provides a bit more. Some hospitality businesses have been splitting that with the customer, so they're able to lower their prices a bit and also make a bit more margin, covering the cost of things like table service, extra screens, extra staff. So overall, I think it was a very welcome, boost for small businesses to get them through at least the next year.
And there was a lot of emphasis on long-term planning. Like, most people were not expecting the furlough scheme to go all the way until the end of September, although the support will be tapered off from the late summer, when you would hope that most of the economy will be back open again in some capacity at least. So if you've got any questions about the extension of the furlough scheme, how that will work, or any views about those grants that are on offer, or discretionary grants that councils will be offering later down the line to people who don't have a business premises, I know there are lots of you watching, then do get in touch. Now, finally, Andy, before we go on to the reader questions, and I have to say we're getting a lot of reader questions about this topic, the self-employed. Now, there were high hopes at the budget that there would be more help for the 3 million people so far excluded from government support, not just the recently self-employed who did get a helping hand, but sadly nothing there for limited company directors, PAYE freelancers, and other groups. But tell us a bit about the numbers of self-employed people who we think will be able to claim for the 4th and 5th SEISS grants. There's a bit of a debate raging about this.
Yeah, this is a very complicated area. So effectively, the grants you get are based on your profits and the tax returns that you filed. And obviously, if you were for people in that terrible position where they'd set up their business, you know, just in the year before the pandemic hit, so they didn't have a tax return to file, the Treasury simply said, well, you can't have any money. Those people will have now filed a tax return, and therefore they will be eligible for support for these last two grants. The issue there is, of course, they may not be eligible because they may have made too much money, or other factors which rule you out. For example, you've got to make 50% of your earnings at least from self-employment. So that the ONS has about 144,000 people became self-employed and set up businesses in that tax year. The Treasury is pointing to tax returns filed, which apparently is an extra 380,000. So some of those 380,000 is what they're looking at. A good chunk of those will be eligible. They're also talking about the fact that this runs over 4 years, and therefore, if you already had a business for those 4 years, and last year was a bad one for you, you may enter the eligibility criteria, and it will have been a bad one for most people. So therefore, that's how they're coming to their 600,000 figure. But even they have to admit that it's a sort of it's a bit of a stab in the dark. It could hit 600,000. It could be far, far less. And as you say, Claire, we know there are still, hundreds of thousands more who definitely don't qualify for this support. And there was, a lot of MPs and a lot of campaigning by groups such as Excluded and Forgotten Limited, who are really hopeful that this budget might be the one where they get some joy. And sadly, they didn't.
Well, certainly, I've been sent a message from Rebecca Seeley-Harris. She's the tax expert who came up with a plan which was submitted to the Treasury before the budget that would have helped limited company directors. And obviously, she said there was obvious disappointment in the budget yesterday that we didn't manage to get the directors' income support scheme adopted, but at least we tried. And we tried very hard, all of those groups, Forgotten Limited, the Federation of Small Businesses, and also ACCA, the accountancy body. She says we'll need to regroup and reflect on what we do next. But she is pleased at the fact that the Treasury have now opened up the self-employed income support scheme to more people, a small but significant win, Rebecca says. She also emphasises your point, Andy, that more people who weren't eligible the first time around, now that it's spread over 4 years of average trading profits, it's possible that you will be eligible. But she agrees there's a lot of confusion over that 600,000 figure of the people who now may be able to be helped. So the fifth grant we can talk a little bit about now before we move on. Now, this is an interesting one because they're saying the fifth and final, Chancellor's very clear about that, grant, which will be eligible for the self-employed to apply from July. You'll only get the 80% rate of your average trading profits if you can show that your turnover has reduced by 30% or more. But there's quite a lot of confusion about how you will prove that your turnover has gone down, particularly if you've only got 1 year's worth of accounts filed. Do you have any bright ideas on that one at this stage?
I think you've got me there, Claire. Yeah, I mean, if you haven't filed accounts before, how can you prove? I mean, one would hope there might be a blanket exemption, given that these will be people who haven't had any help before, and they'll take your word for it that your turnover is down by that much. And of course, there is also a date issue here, where some of these grants, you can't really apply for them until you've already lost the money, in a sense. I think the fifth opens in July, I believe, is that right? And the second one opens in about April. So you're already losing the money in February and March, but you can't apply to get it back till April, and you probably won't see it in your bank account till May. So still a lot of cash flow pressures on self-employed businesses.
Indeed, and Roger Parker, he's contacted us via Twitter. He is a self-employed guy who has been excluded from support. He says, despite what Rishi Sunak will claim, this is not a change of policy, letting the newly self-employed put in a grant. He says, I don't think it was done as a concession, but it's purely down to the passage of time, 1 long year. He also makes the point that many people who've only been self-employed for 1 year, because you're setting up your business, the actual trading profit that you'll make, which is what you're allowed to make a claim on, will often be minimal, or in many cases non-existent, for those who are starting out on their journey. So I'll move on to some other questions now. If you would like to ask one, just to reiterate, you can either put your comment at the bottom of the ft.com story if you're watching us on the FT website, in the YouTube chat, or in the LinkedIn chat if you're watching us on LinkedIn. So let's just go through a couple more things. Andy, FT reader Dr. Ewan asks, are there any mentions of support for struggling aviation, hospitality and events industries? I know that some Conservative MPs were anxious to see provisions included to aid these struggling groups. So aviation, hospitality and events.
Yeah, I think we've obviously covered hospitality, which did get some help through the grants and a VAT cut. Aviation is a big miss. You know, I mean, Andy Burnham of Greater Manchester, who's been campaigning for the excluded, you know, he likened the budget to a polo mint full of holes, or a packet of polo mints, and one of the holes is obviously aviation. I mean, there seems to be a diminishing chance of serious international travel returning before the end of this year. You know, the government is certainly not pushing that. If anything, they're telling people not to book their holidays. And one of the people I spoke to for my budget piece on SMEs is one of the excluded, lady Anita Mandel, who does guided accompanied tours with people around the world. And she said she'd be lucky to get any work at all. She won't get any before September. She might get some in September, but she's effectively thinking it's going to be, you know, another year from now, by which time she'll have had 2 years with no income and no support. And the aviation industry is, it does seem to be a remarkable oversight that there wasn't any particular help. I think one thing that probably government feels is a lot of the businesses that are involved in it are very large and therefore can sort of look after themselves a bit. And they have had coronavirus interruption loans and help from the Bank of England and things like that. But, you know, there's also that huge network of tour guides and hospitality businesses and as our reader says, events businesses, which rely on international travel, that have really been completely left out again.
Quick shout out for a very good support group for people who work in the events industry. We Make Events. They're definitely well worth following. A great community of like-minded individuals. If you are somebody who works in live events and needs to feel a bit of solidarity, do check out their page. Now, we're getting quite a lot of comments about corporation tax, Andy, so I'm going to read out two. Mark Steele on LinkedIn, thanks for commenting, Mark. He says, I was expecting an increase in corporation tax to 23% worst case. Being honest, I was not expecting it to go up to 25%. And this, along with the static personal tax allowances, including those triple lock pensions, it will all go towards paying down the debt from the coronavirus, but don't inspect inflation busting pay rises from your employer. Well, an interesting view there. And then another comment from Phil McMahon on LinkedIn. He says about the corporation tax increases, I would imagine many professionals who might see their salary and bonus prospects dented, and business owners aren't for it, but the government is going to have to repay the money it has borrowed over the past 12 months one way or another. So two different views about corporation tax there.
Yeah, I think we're heading for something like 400 billion of borrowing, and, you know, 100% of GDP, 120% of GDP as our debt. And the Chancellor, to be fair to him, does have to find the money from somewhere. And I think he's tried to skew the corporation tax towards the biggest businesses. That may have an effect on investment and international, you know, multinationals coming into the UK. But I guess he just made the calculation that, you know, squeezing personal allowances was better than putting up a penny or two on income tax. And then, indeed, some of the small businesses I spoke to about their budget reaction were quite surprised, actually, saying, well, we're surprised he didn't do more on tax, because, you know, a lot of businesses have had help, which they needed through no fault of their own, but that has come from the taxpayer. And at some point, the taxpayer is going to have to be repaid, you know, the general public, through either paying the tax themselves or through business taxation.
Well, just a couple more comments of flooding in on this issue. Lots of people, including Batanai Chimanda on LinkedIn, and also Butch Michael on YouTube. He says, I'm pro-tax, but it's the customers who end up paying the tax. And Batani says, usually the business will pass on the tax as price inflation to customers. They will always get their profits. But Andrew Demetriou on LinkedIn says, I'm surprised at the business focus and generosity of this budget. It is extremely generous and business focused. Coronavirus has to be paid for, so the rise in corporation tax is a necessary evil. Well, some interesting views there. I'm going to read out a comment now from Arshad Baig on LinkedIn. Thank you for commenting about attracting foreign businesses to the UK. Now, before I read out that comment, I spotted something, Andy, yesterday about the budget document in my nerdy way. That it didn't mention the word Brexit once. When you do that very useful Shift F function where you can find words, I put in Brexit, nothing. I put in exit, and there was one mention of EU exit, but there has to be said. It does seem extraordinary that we didn't really get anything said explicitly about that. Now, Arshad's question, which does relate to this, he says the increase in corporation tax will be a deterrent to multinational companies establishing their base in the UK. Is this a smart move, considering the challenges that Brexit has posed? What do you think, Andy?
Well, I think it is, again, it's a trade-off, isn't it? Because somebody has to pay back these debts. I mean, the point I made, it will deter international investment, I'm sure. On the other hand, what's been remarkable since Brexit is the amount of international investment there's been. I mean, the FT carried a story a few days ago about how there are record numbers of British businesses being bought by foreign buyers since Brexit, partly because of the cheaper pound, partly because it's felt the stock market doesn't value them highly enough, especially in the manufacturing sector. So I think if the and with multinationals, corporation tax, they can find ways of paying it where they want to pay it. So I'm not actually sure that having a high corporation tax in the UK necessarily means, they will probably domicile themselves somewhere else. We've seen it with Amazon and Facebook and those kind of businesses. They're able to put a lot of their money through Amsterdam or Ireland at lower tax rates. So in fact, the assets might be here and the business trading might go on here, and they find a way to slightly nuance the tax take, putting it somewhere else. So I don't think it's a huge problem. I think it is a problem, but not a huge problem.
Well, certainly, do keep reading the FT in the next few days, because I know that this is an issue that some of mine and Andy's colleagues are very sharply focused on right now. Now, I'm going to read out this comment from FT reader Paul Christensen, which is about restart grants. That's the name for the new grants that you're able to claim that we were talking about earlier on. He says the restart grants will do exactly what they say on the tin, restart Britain's economy. But the UK small businesses deserve long-term sustainable cash flow to allow them to recover and grow, and by which he means faster invoice payments. Now, the £5 billion, he says, that the Chancellor has set aside for restart grants does not scratch the surface of nearly £24 billion in late invoices owed to SMEs. Treasury and business need to come together to create sustainable financing for British SMEs, and this starts with faster payment. Well, I have to say thank you, Paul, for raising that, because the issue of late payment for small businesses and people who are self-employed and freelancing, this has been an issue for long before the pandemic, and there's been previous budgets where action has been promised, there's been consultations, there's been, all kinds of, talking, but not much action, Andy.
Yes. I mean, the latest thing is they did strengthen the prompt payment code, basically making it an offence to break it. So if you sign up to that you will pay your suppliers within a certain amount of time and you don't, there will be sanctions. The problem is the prompt payment code is voluntary, and therefore presumably anybody who doesn't want to abide by it will now just leave it. And the government has not really, they've sort of had this ratcheting up of the rhetoric, the ratcheting up of advice and guidance, and appointed a small business commissioner who can intervene in cases and now and then gets a company to pay up. But we are sadly one of the worst offenders in Europe. Our big businesses are among the worst offenders in Europe for paying late, and the government really doesn't have a grip of it, and it is. I mean, it's destroying many small businesses. More power to people trying to sort it out. And I would agree. It seems remarkable that, especially as we come out of the pandemic, cash flow is more important than ever. they haven't got a grip. And the other big lacuna for me really is business rates. Yet again, I think we've talked on this on these videos several times about business rates, and there we go. Not really a mention yesterday. We were all wondering, would there be an online sales tax with business rates reduced a bit for the high street? And again, another issue that's really been postponed for another day.
I don't know about you, but I have got the date, the 23rd of March, ringed in my diary. I was going to take it off at one point, but no, because now we found out that this is what's being dubbed within Whitehall as Tax Day. Because in order not to distract from the Chancellor's largesse at the budget yesterday, there's going to be a raft, we're hearing, of tax consultations, which will all be launched on a single day, the 23rd of March, in order to put a bit of clear blue water between the budget and the doling out of cash and the talk of the tax rises in the future. This is like a long-term tax planning exercise that would be needed to claw back some of that money. Now, we don't know yet what consultations are going to come up, but as Andy said, taxing digital businesses, that is a very big, gnarly area of tax law. So I'd be surprised if that wasn't in there. Also on the digital side, perhaps making tax digital. There could be some more information on that. How the tax system is increasingly working in real time for small businesses and the self-employed. I'm sure that will be of interest to lots of you watching today. But then on the personal finance side, could we get something on the future of pensions taxation? Could we get things on the future of capital gains tax? There's been some big reviews going on in the background by the wonderfully named Office of Tax Simplification. Now, we didn't get any changes to those kinds of taxes in the budget yesterday, but Andy, obviously, anything concerning CGT is a big worry for business owners who are looking to, sell their businesses in the future and use the proceeds to fund their retirement.
Yes, it is. And I suppose one could perhaps take some hope from this approach on corporation tax. If there's an admission that, small businesses and big businesses need different rates and different treatment, then that may be a way of signalling how the Treasury will think about capital gains tax as well. The other thing we haven't had is the sorry about this. The other thing we haven't had is the always happens, isn't it? Is the self-employment taxation, which will come as a relief to many people because, of course, for quite a while they've been talking about increasing taxes on self-employment.
Well, indeed, when the Chancellor first announced that he was going to launch the self-employment income support scheme, he issued it with a quite stern warning that the taxation of the self-employed would be looked at again in the future. I had lots of questions on the LBC phone in last night about IR35, which will be coming in from April. Lots of people dismayed that that is still going ahead. Really don't think it's the right way to enact these reforms, and it doesn't solve those underlying problems at the heart of the tax system and how people who are working in a freelance capacity or contracting are just having to spend more and more of their working lives dealing with the tax complications of working flexibly.
Yeah, which is something that we're all encouraged to do now, isn't it? We're supposed to have portfolio careers and flexible working and side hustles, and yet the tax system is not really geared to cope with it. So yes, I shall put the 23rd of March in my diary as well.
Well, you never know.
1 year since the lockdown, but
maybe the day after, when we've had a chance to read through all of these huge consultations and wear out our home printers and stock of highlighter pens that we've purloined from the FT's stationery cupboard, we may come back and do another video. Now, I've got one last question to ask you from a reader, which is all about housing. Obviously, lots of measures in the budget yesterday to boost the property market. Gary Spencer on LinkedIn says, do you think the measures to stimulate the house building industry are enough to enable the industry to build enough housing to meet demand? And to that, I would add a personal question from me. Andy, do you think that the measures that we had yesterday, the stamp duty and the 95% mortgages, are really going to help first-time buyers, or are they just going to push up house prices?
Well, I think they will push up house prices, won't they? So those who can get a toe on the ladder will do very well. It's the one bit of the economy which has actually been flying during the pandemic, ironically. I mean, thanks to the stamp duty holiday, it was seen as, oh, we need to give a help to the housing market, and actually I think it's busier than it is in normal times, because it's just stimulated this huge demand. And unfortunately, all the evidence shows that the private sector struggles to build enough houses in the UK. And the only time we've ever really built enough houses is when we had a big council house and social housing programme. And until you go back to that, or whether it be through housing associations or whatever else, it's very, very hard to see how you can, build enough houses to satisfy demand.
I mean, certainly from to answer Gary's question about the stimulation of the house building industry. I mean, if you're a private investor and you've got shares in the house builders, I mean, there are a couple of them went up. Share price went up by about 4 or 5% yesterday, and that's after these 95% mortgage measures had been widely trailed in the weekend papers a few days before. So certainly the house builders and those who invest in them are expecting that it's going to produce a bit of a boost.
Yes, I mean there will be more houses built, but there will be more people with more money in their pockets to spend. Which is presumably what the chancellor intends. As your house price goes up, you do your house up, you spend more on it, you spend more on other things in the economy, but you increase that gulf between those who have and have not. I mean, somebody pointed out there was nothing for renters in the budget at all. So fine if you're able to get that deposit together and have a helping hand and buy a house, and the prices continue to rise, but not so great if you're locked out of the market and you're having to rent.
Well, we did get mention of the word rent in the budget speech, at least when Rishi Sunak said we want to turn generation rent into generation buy, although one of my followers on Twitter has quite aptly pointed out they'll be turned into generation debt, because in order to afford taking on a 95% mortgage, you're probably going to need to extend your loan term over 40 years. And while interest rates are low, that may not seem too bad, but who knows where they're going to go and where inflation will get to in the future. Well, listen, Andy, thank you so much for joining me today. I'm going to call a halt to proceedings now, but thank you to everybody who has been sending us questions, whether you're watching us on ft.com, on YouTube, or on LinkedIn. I'll just get a quick plug in. The FT Weekend newspaper on sale from Saturday will have a full guide to the budget in the FT Money section, which will include some of the things we've been talking about today, help for the self-employed, and obviously lots of coverage in the main paper about what this means for businesses. We've loved having you join us. If you want to speak to us afterwards and send us anything that you would like us to investigate in the future, you can contact us on the email money@ft.com. Any messages you've got for me or Andy, I'll be happy to pass them on. Otherwise, we hope to see you back here, perhaps on the 24th of March after tax day, for another live Q&A. Thanks very much.